We're taking a look at how we're going to get our cost characteristics that are going to help us make our decisions for our management team. So we have to go take a look at the different parts that are giving us our total cost. So again, when we think about the phrase for accounting, the total cost is really all of the costs for a specific period. We're going to take our total cost, but then we also need to get something from it called our unit cost. Our unit cost is basically we're going to take all of our costs of our merchandise, the total, everything added together, and they're going to divide by the number of units that are going to be sold for a specific time period. And when you do the math on that, it'll give you the cost per unit. And we're going to need to go through and know our cost per unit for us to go through and make some decisions. When we take a look at our costs, we have some costs that are variable and we have some costs that are fixed. Variable costs basically are going to change in proportion to the number of units that are made. When we take a look at some of our variable costs, we have an example of 1 hour of radio advertising for $150. If the business later buys 10 more hours of advertising, regardless of the number of hours purchased, the unit cost of an hour is still going to be $150 per hour because the number of units that are going to be sold hopefully will go up because of the advertising, but it's not necessarily going to change too much. Because we have variable and we have fixed costs, we have to go through and see which ones are going to be variable or fixed. When we take a look at fixed cost, and the best example that you have for a fixed cost is going to be your rent. No matter how much money the business generates every month or how many units that they sell, the rent is always going to be the same cost, so that would always stay the same. Another concept that we have within Section 15-1 is going to be our contribution margin. Our contribution margin is basically going to be our income determined by subtracting all of our variable costs from net sales. So again, we have to take a look at which costs are going to be variable and which costs are going to be fixed. We need to know that as a manager. And then when we take our total income and subtract our fixed costs, that will give you your contribution margin. And then you can take your contribution margin and divide by the units sold, and that would give you your contribution margin per unit. And again, we always have to take a look at our information per unit or if it's going to be for our total value. So when we look at 15.1, we're going to be going through and doing an income statement for January, and we're going to be going through, and on your own, you're going to be doing one for February. But hopefully after we go through January, it'll be good to go. So these numbers right here are what we're going to be doing. So we have to go through and lay out our income statement. What goes on the very top is going to be our operating revenue. So basically, anytime we do an income statement, we have to have our revenue on the top, and then we're going to go through and we're going to list our expenses on the bottom. So when we take a look at our operating revenue, it tells us in our book that we have net sales of 52,000 square feet. Okay, so I'm going to put in here net sales. And then we have 52,000 square feet, which is going to give us $7.50 per square foot. Again, right here, here's our net sales, 52,000. Net sales price, $7.50 per square foot. Again, we're a lumber yard, so we're going to be measuring it in per square foot. So mathematically, we're going to go through and take 52,500 and you're going to multiply that by 750, and that's going to give you 390,000. That 390,000 is going to go over here on the right-hand side. And the reason it goes on the right-hand side, not the left, is because this is it under our heading. We don't have another source of revenue. Below our operating revenue, we're going to get our variable costs. Okay? And our variable cost, that is the wrong heading, excuse me. It's going to be a variable cost with our colon. When we take a look at our variable cost, the variable cost, we have to go through and determine our cost of merchandise sold, our sales commissions, our delivery cost, other variable selling expenses, other variable administration expenses. And then we're going to take a look at this one right here is a fixed, rent is fixed, insurance is fixed, and this is fixed. So right here you have to look at these and you have to determine, is this going to be a variable or a fixed cost. So the first one we're going to do is going to be the cost of merchandise sold. And we know that we have the cost of merchandise sold. The total number of units that we have for our Reitman lumber is going to be 52,000, and we know our square foot is 460. And how do we know that? Again, look right here, 460 for your cost of merchandise sold, 460, but we have to have the right number of units. So again, this auto-filled for the wrong one. Mathematically, I'm going to go through and do that. I'm going to take 52,000 times 460. That's going to give me 239,200, and that's going to go there on the left-hand side. Why the left? I'm going to do some math going down to get my total variable cost there. My next variable cost after cost of merchandise sold is going to be my sales commission. And in my directions, I have sales commission of 32 cents per square foot. Well, we had 52,000 square feet sold at 32 cents, so my variable cost there is going to be 16,640. Again, just do the math that's listed right here. My next variable expense is going to be my delivery cost. My delivery cost says I'm 50 cents per square foot. So 52,000 square foot times 50 cents is going to give me 26,000. Next variable is going to be my selling expenses. So I'm going to have other selling costs at 52,000 square feet at 35 cents per square foot. Okay, where did I find that? Other variable selling expenses right here at 35 cents per square foot. Mathematically, you could take 52,000 times 35 cents, and that's going to give you 18,200. My other variable is going to be my variable administrative expenses, and that says in the directions that I have 30 cents per square foot. And that's going to go through and go there. It's going to give me my other administrative. So when I'm looking at my various ones here, we can easily tell which ones are going to be variable or fixed because variables have it listed per square foot, and your fixed are going to give you an exact dollar amount. So that's another hint to help you out. So I'm mathematically going to do that, 15,600. Below that, I'm going to have my total variable costs. All I need to do is just add up these numbers right here, and that's going to give me 315,640. And that is going to give me my contribution margin. Again, that's one of our vocabulary terms associated with Chapter 15 here. And when we look at the definition of a contribution margin, it is the income determined by subtracting all variable costs from net sales. So if I subtract this 315 from 390, my contribution margin here is 74,360. Now I'm going to get into my fixed costs, and I'm going to start first with rent, possibly. And my rent is $3,800. Then I'm going to have insurance for $450. I have my other selling costs, and that's going to be $7,112. Other administrative costs is going to be $12,540. Total fixed cost, do the math, $23,910. And that is going to give me my net income. How do I get my net income? I'm going to take my contribution margin of $74,360, subtract $23,910, and then that will give me $50,450. Check my answer to see if I made a mistake. We're good to go. So that's how you go through and prepare an income statement with a contribution margin. Good luck on your own.